Hi everyone and welcome to my daily report market analysis videos with me, Richard, market analyst at Hantec on Tuesday the 21st of April. We've got risk aversion starting to come back into the markets in quite a strong way. We had a corrective move through Wall Street yesterday, and that move has started to really come through into European session. Futures now on S&P is now over 1% lower. We've seen around about 2% on the European markets sliding, and broad risk aversion is coming through. We've got the dollar, which is stronger, US dollar, which is gaining ground again, moving out to 2-week highs then once again, and also we're starting to see treasury yields breaking down. Now, treasury yields breaking down as the US dollar strengthens is definitely a risk aversion play. So safe haven flows are in vogue, and certainly the Japanese yen outperformance reflects that. Interesting that gold has fallen back again. It looked this morning as though gold was starting to take on more of a safe haven play once more, but it's been hit as the forex majors have also been hit. So gold is now $15 down on the day. 1671 is the key level to watch out for there. I'll talk about the technical implications of that in a bit. Now, broadly speaking, Aussie and Kiwi are the underperformers today, and well, can't really go too far without having to mention the oil price. What a significant sell-off we saw in the oil price yesterday, down to $40 negative on WTI. The front month WTI contract at $40 negative. Rebounded today, although that rebound has lost its way a bit. But you get the contract rollover, which takes a place today, and that would then put the June month as the front contract, and that's trading around about 19 odd bucks positive. So you're going to see a big jump at the open tomorrow. So that oil price sell-off in WTI is also now starting to impact through Brent crude as well. 17% down on Brent crude. Wow. So these commodities, or certainly the oil commodities, are under a lot of pressure today. Where else are we looking at? Well, as I said, equities sharply lower. That's basically what we're seeing. And also, in terms of data, we've had, I should say, the European data this morning. We've had UK UK unemployment data for February, mind you. Just a tick higher on unemployment, but interesting that the claimant count actually didn't rise that much for March. That is the claimant count for March. These other indicators are for Feb. Wage growth falling away, but certainly the focus will be on job losses rather than wages at the moment. I think it will only be March when you start to see that those data really impacted. Also this morning we've had the German steady W. Better than expected, 28 positive, and bearing in mind that the current conditions component was much worse than expected at 91.5 negative, that would obviously suggest that the expectations component came in much higher than expected. So that's a little bit of positivity to maybe hang on to, but it's not really affected through the euro yet. This afternoon we're looking out for existing home sales from the States. 5.3 million, so a fall of 8.1% expected in the existing home sales. One would be surprised if it doesn't continue to slide significantly in the next few months on existing home sales. Okay, so my chart of the day is dollar Swiss. Now, dollar Swiss, interesting chart because of basically it's not going anywhere. That's why I feel it's interesting. You can see here, I spoke on the daily report about the fact that you've got these huge swings on dollar Swiss, but the swings are losing magnitude, and it seems as though it's almost like a sine wave where we're sort of seeing the lower magnitude of the daily swings of the swings higher and lower. We're now starting to see consolidation around these fib levels. 61.8% fib is a level that I'm looking at here. That's 0.9705. Basically where we're seeing at the moment. And the recent fib levels, look at that. 38.2% had that low there. 50% was the April low. 61.8% is where it's sort of consolidating at the moment. So you would say that if you can break through 61.8% on a closing basis, on a decisive basis above 97.25, which was last week's high, maybe you get a bit more direction again. 76.4% fib would then come back in as the next target area. 98 figure there or thereabouts was that April high. So you could get a bit of direction, but what I'm basically saying is that looking at these momentum indicators, little real direction that you'd be giving with any conviction anyway. There is a slight dollar positive bias at the moment, but again, would you be trusting that as a continuation against the safe haven Swiss franc would be the question. So yeah, just a little interesting chart which shows that maybe not all forex majors are showing too much direction at the moment. So that's interesting, and I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website where you can sign up for our webinar.